Hello and welcome to analysis. Today we're going to look at SPY, DIA and QQQ and see the health of the stock market. First of all, let's take a look at SPY, which represents the S&P 500. You can see that it is in a very nice uptrend. So when an index is in an uptrend, it's likely to continue to move uptrend. So a trend in motion tends to stay in motion. And we can use the 20 MA, 50 MA, and 200 MA to have a gauge of what it is doing. Now let's the 20 MA, if the stock is above the 20 MA, it means that short term it's strong trend. If it's above the 50 MA, mid term is strong uptrend. So both of these MAs are rising, so that shows us that we have a very strong uptrend in the SPY, and we can expect the market to continue to move up. So you can see that even here it's above the rising 20 MA, 50 MA, and even though there's correction, it continues to chug higher. So let's take it for what is worth and continue to be bullish on the US stock market, the SPY, as long as it's above this 50 MA rising. So a simple trend following method. You can see that the 200 MA is also rising. When it's rising, it means long term it is bullish. You can see that it is also rising here despite the sell-off. Because the 200 MA is rising, it shows that long term it's rising as well. Even here, when the rising 200 MA, there was a nasty correction. The market continued to move up. So to continue to be bullish, SPY had a break above this downtrend line, which signals a change of trend from bearish to bullish. So we had a very nasty sell-off and then a very nice up day, which happened on quite heavy volume as well. So the sell-off was over, there were buyers coming in, and the market is just has recovered from that, and so now we are in a very strong uptrend. Let's take a look at the weekly chart of SPY. It's taking a bit of time to load, but you can see the nasty sell-off here. There was a double top, but after that the green bar here happened on very strong volume, and then it continued just to rise. So this area here will be a very strong area of support. In the event of future correction, this area will be a very strong support. But as we can see in the daily chart, the market is still rising. If you go back to this daily chart, the market is just rising because it's above the moving averages. So let's take a look at Dow. There is more support around here because previous high acts as a support once it's overcome. You can see how this area acts as a very strong support. Even though yesterday is a correction, the market in Dow is still rising, and 20 MA rising, 50 MA rising, 200 MA is slanting higher, which tells us that at this moment the market, we should still continue to be bullish. You see, for a long time the market in Dow has not dropped below the 50 MA, so we want to continue to be bullish in Dow Jones as long as it's above the 50 MA. It has been chugging up higher, so I believe that as long as it's above the 50 MA, it is likely for it to chug higher even further. If you take a look at the Qs, it has been a stronger performer, making new all-time highs. It also had a nasty correction but you can see it broke above the downtrend line, went back above the 20 MA and 50 MA, and now if you look at the 20 MA, which is a red line, and the 50 MA, which is the blue line, they are railroad tracks, and as long as it's moving higher, we can see that it's gonna be quite bullish for the Qs. Okay, so the rising 200 MA is also showing that it is bullish in the long term. So we have some support here, previous high. Here also we have a previous high support. Alright, oops, a bit too much. So all these are previous high. Once they overcome, it becomes a short-term support. Here also it's a support. So you can take this as a gauge. As long as it stays above this area and the rising 20 MA, most likely it's gonna continue to move higher. And notice how it has not gone below the 50 MA for a very, very long time. So we want to continue to stay bullish on the tax, right? Because the trend is there. The trend tells us that the market is up. The 200 MA is also rising, and we want to continue to be bullish as long as it's above the rising 20 MA, 50 MA, and 200 MA. It tells us it's short-term bullish, mid-term bullish, and long-term bullish. So the US market is actually quite bullish right now, despite the government shutdown and so on. Everything is fine, everything is good. So you want to continue to be bullish and look for breakout trades and buy the dips. So I hope that this analysis has been helpful. Do stay on the bullish side, and I'll see you on the next one. If you find it helpful, do subscribe to my channel, and I will see you in the next analysis. And one thing, I will be building a course on how to analyze stocks and financial market using technical analysis. Also, we'll be writing a book on how to invest in the S&P 500, because it has gone up an average 10% a year. So it's good for you to invest in SPY rather than market timing. So thank you for everything, and I'll see you in the next one.